This is All India Radio. In the program Spotlight, now we bring the discussion on Foreign Trade Policy 2023, a vision document to boost India's exports. The participants are A.K. Bhattacharya, economic analyst, and Anubha Rohatgi, AIR correspondent.
India's Foreign Trade Policy FTP for the year 2023 has been announced by the government and it came into effect from today, that is April 1st, 2023. To discuss more about the new FTP, we have with us economic analyst A.K. Bhattacharya. Mr. Bhattacharya, welcome to the AIR Spotlight program.
Thank you.
India's foreign trade policy for 2023 was announced by Commerce Minister Piyush Goyal yesterday. Though our exports have been rising and in fact new records have been set, how important is this policy given the supply chain disruptions and slowdown in global trade due to various reasons?
This policy is coming at a time when there are headwinds to India's merchandise goods exports. As a matter of fact, our merchandise goods exports growth has not kept the kind of pace which we saw last year. What has kept us going is the services exports, which is why if you take both the services as well as the goods exports, combine them together and you see that the growth is around 13-14%. But if you break them down, you will see that the services exports are growing by almost 30%, merchandise goods growing by only 8-9%. So therefore, this policy was needed at a time when there was a little bit of uncertainty over the global trade situation. Two, there was this uncertainty about what kind of trade policy should you have, because remember the last policy had expired on 2020 and it was being given an extension almost on an annual basis. Of course, there were COVID years in between, so that was number two. And number three, given the situation that apart from the global economic headwinds, the nature of the world economy has changed and therefore the new policy should recognize those new realities, the new thrust areas, and I think this policy tries to address all these areas.
So what are some of the highlights of India's foreign trade policy that will boost domestic manufacturing, strengthen our export base and help create more entrepreneurs?
Number one, it focuses on an area which is e-commerce. Now, as you know that e-commerce is doing very well in this country, particularly in the post-COVID situation, using technology, using digital payment system, and we can use this e-commerce ability of conducting e-commerce in a far more efficient way for earning foreign exchange as well. There are a lot of foreign companies who are coming here, and the e-commerce companies, and they're using local goods and produces and selling them to Indian customers. And this policy takes note of the fact that this is an area which can be exploited for helping India earn foreign exchange through merchandise goods to these e-commerce companies. So you will note that right now the e-commerce exports is around $2 to $3 billion per year. And now the government believes that this is an area where we can do much more exports, and the target for 2030 for e-commerce exports is almost around $300 billion. So now that's the big jump, and I think implicit in this target setting is the government belief that e-commerce is an area that must be exploited. That's number one, which will create jobs, because e-commerce essentially means that you are procuring goods and various items from different parts of the country and then selling them abroad. Number two is that MSME sector is accounting for more than a third of India's exports. Now, this MSME sector has been given a special emphasis in this policy. The compliance costs for the mini, small and medium enterprises for exports have been brought down significantly. The application charges, the way you deal with various government agencies for undertaking exports have been simplified. So the hope is that MSME sector will be able to recover its exports dominance, which it had lost a little bit because of the post-COVID situation. And number two, the MSME sector is also largely in the small manufacturing areas. Now, manufacturing sector, as you would know, is also the sector that creates jobs, and jobs of a type that does not require the high-end education system produces. So it will be able to create jobs of a middle and the low end, and it will also address the concerns that we have about how do you make sure that economic growth also leads to more jobs.
You of course mentioned the e-commerce sector and e-commerce exports that are a key feature of this particular policy. How will this policy promote and facilitate them? What are the key points with respect to the e-commerce sector?
E-commerce is a sector that has got a technology framework. You have got the aggregators who use goods and even services these days from variety of suppliers. Now, these suppliers either procure those goods or they manufacture it themselves, and then they sell it on a platform. Now, what happens is that when an e-commerce company undertakes these goods for domestic marketing, now the platform is simple and straightforward. But when it becomes international operations, there are many other, not complications, but policy challenges that come in. The Reserve Bank of India will come in, and how do you treat those exports through the e-commerce route? So therefore, this policy's reiteration that e-commerce would be a major thrust area, in my view, is an indication. One is the growing reality of e-commerce, and two, that the policies will be modified or changed to encourage exports from e-commerce companies.
So what are the provisions in this particular policy that will facilitate the exports from the e-commerce sector?
There is no specific schemes for just e-commerce companies, but there are many schemes in the policies which will promote exports, and those schemes can be utilized by the e-commerce companies.
The MSMEs based in small towns and cities, and that is yet another feature of this policy, the extension of Towns of Export Excellence Scheme and Districts as Exports Hub initiative. Both these schemes aim to encourage exports from small towns and districts and cities. So to that end, it has added 4 towns to the existing 39 towns. How important is this scheme and these 2 initiatives to bring small towns and cities within the export ambit?
They're very important because, as you would know, that there are 39 towns already which are called Towns for Export Excellence, and 4 more towns have been added. They will certainly provide more impetus to exports from these towns, and these towns are Faridabad, Mirzapur, Banaras and Moradabad. And as you can see that the earlier towns were Tirupur, Chennai, Jodhpur, Ahmedabad, Vadohi. Now, what happens is that exports look like an activity not just undertaken in the port towns. Exports are actually a product of the local towns, local districts. Now, apart from these towns, there is also focus on districts in this policy. And both the districts and the towns received a lot of focus and impetus in this policy. And my belief is that this policy can really galvanize these 43 towns of export excellence. It will not only help promote our exports, but also create more jobs at the local level, and that will be a big bonus in my view. Let me say here that the target the government has set for itself on exports is a pretty ambitious target. Therefore, you need to widen your focus and widen your scope of your policy to new areas, which is why you mentioned about MSMEs, we are talking about e-commerce, we are talking about courier companies. Now, earlier what used to happen was courier companies would have a consignment value limit of 5 lakh, it has been raised to 10 lakh. Now, similarly, the target now, 22-23, which ended on March 31st, is around $770 billion, both goods and services. Now, if this has to be raised to $2 trillion 7 years from now, it will require this kind of policy support and incentive. So therefore, I personally feel that widening the scope of the policy is very, very important and is a good move.
You mentioned, of course, the ambitious target of $2 trillion by the year 2030. The government has said that the goal of achieving this particular target would be by shifting from incentives to remission and entitlement-based regime. Can you explain what does it mean and what will it entail?
Well, I think it's a very important point that you have raised. It's an important shift in the policy focus. Remember that the World Trade Organization frowns upon any incentive that are given in the form of either tax reliefs or in the form of subsidies. Now, this policy actually shuns subsidies. It does not give you incentives. What it does is increase the reimbursement of duties and taxes that an exporter pays. Now, the reason why it has shifted the focus on reimbursement of taxes and duties paid by exporters and not just paying subsidies is, one, is to steer clear of the WTO controversies that we are unlawfully giving support to our exporters. So nobody can find fault with this policy of reimbursing our exporters the cost they incur on paying duties and taxes at home. Because we believe that, and the World Global Trade Organizations believe that we need to export our goods and services, not our taxes. So therefore, this policy is clearly moved away from incentives, moved away from subsidies, and focused more on reimbursement of subsidies and reimbursement of taxes and duties. There is a scheme called reimbursement of duties and taxes paid on exports. RoDTEP. Now that scheme has got a big leg up in this policy.
Now, in the past, the practice was to announce a 5-year foreign trade policy, but there is no end date to the present scheme. And the government has said that the reason is that because it is a new policy is dynamic, which will be updated continuously. So what is the reason for this shift in the policy formation, and how will it help in achieving our targets?
There's a background to it. The last policy was introduced in 2015, and this was a 5-year policy. This ended in 2020 March. And if you will remember that around the same time COVID struck the Indian economy, since then the policy has been extended by 1 year or 2 years. So there was a lot of instability, suspense. You do not know what will happen, what will not happen. So what the government has done now, very pragmatically and sensing the uncertainty in the minds of exporters, government has announced a policy without any end date, now, which means the policy will be dynamic, which means the policy will be alive to evolving needs and concerns of the exporting community. If something goes wrong somewhere, then the government can step in and say, this is how it will be amended. And also there will be no uncertainty closer to the date of the end of the policy that, oh, this policy is coming to an end, what will happen? So all these issues are very important. So that's why this policy has no end date. It started 2023 and we will keep revising as and when the need arises.
But if it's an open-ended policy, if it is a dynamic policy which will be continuously updated, won't that create also a kind of uncertainty in the minds of exporters about when the rules might change?
That uncertainty existed even when there was a policy of 5 years or 3 years. Now, the fact of the matter is that even if you have a time-bound policy, the government had the option, the freedom to change policy even on a day's notice. Now, what is happening now is that there is no end date, but the government is open to modifying or amending the policies in keeping with the needs of the day.
Lately, the government's efforts to make the Indian rupee a global currency, we have seen this, and for this, changes have been made in this foreign trade policy to allow international trade settlement in Indian currency. How important is this in the present scenario?
This is a very ambitious policy statement in my view. What the policy goal is that the Indian exporters right now use dollars, which is the hard currency, for both their exports as well as their imports. There have been occasions in the past, and many years ago, we used to have a rupee trade with Russia and the erstwhile Soviet Union countries and even East European countries. Now, there what used to happen, there used to be a rupee account which would be used for both import and export between the two countries. Now the new situation has arisen. There are some countries which are having problems with their hard currencies. So the Indian government is using this policy to send out signals to these countries which can probably use the rupee channel for making payments on their imports from India. Now this will require the collaboration of the central bank of both the countries. This will require the collaboration of the other agencies. So it's a statement of intent. It's a goal that has to be achieved, but the nitty-gritty of the policy will have to be worked out over time.
In an interconnected world, how will the new Foreign Trade Policy 2023 help India expand its trade ties with the other leading world economies?
For that, it's very important that exports are not just producing goods at home and exporting them, but also create globally interconnected and globally interdependent economy at home. Now these require two things. One is to be part of the global supply chains, and already India is the home to the world's largest number of global capability centers, and that's in the services sector. Now it is important to replicate that success of global capability centers into the global supply chains in the merchandise goods categories. Now what happens there is that it is necessary to be plugged into those chains so that you can supply as well as procure goods. Key component of that is domestic competitiveness, ease of doing business, and the import duties need to be of a level that do not take away our global competitiveness. So all these areas are very important inputs to making India an important player in the global trade scenario.
Mr. Bhattacharya, thank you so much for joining us on this program.
Thank you.
You were listening to a discussion on Foreign Trade Policy 2023, a vision document to boost India's exports. The participants were A.K. Bhattacharya, economic analyst, and Anubha Rohatogi, AIR correspondent. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on a mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 9289094044.